Good evening, all. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening as we're here now at 7:05 p.m. Central Time on this Monday, the 31st of July, 2023. So as I'm looking at the markets and trying to get these different things to work with it through, you got to ask yourself, where are we? We're at month's end. A lot of evening up took place today. There was good money made in the stock market. Metal markets they're back up to the 2000 level. Silver is knocking on the door of the $25 area, and the copper has been able to cross $4. So very gradually, prices have increased. Now, the copper I get, people are anticipating because Goldman Sachs came out and they put out a higher numbers that they thought copper would reach due to the Chinese situation, where they're expecting China to do something to spur on copper demand. In addition, you know that there's shortages of copper. I keep writing about it and telling you, so that combination's there, but you're up at some pretty big resistance. It's not that appealing to me there. When I look at the gold market, you can see how the market just sort of fluctuating against the 18-day average, but keeping a downside bias as it's under that number. When you look at the chart action here, you still have the pattern of lower highs, lower lows, which is bearish, but it's contained. Each time the market tries to do something under that 18-day average, it stays there a day or so and pops right back. You haven't been able to get anything going. I would think that if you got under 1983.90, which is $20 or so lower, that might get you something, but I'm not convinced that's even the case. When we take a look at Bollinger Bands, you're nowhere near them. You had the run up to it, you pulled back, you're just sort of fighting right here, really not going anywhere, and momentum's down. Plain English, the chart, nothing pretty on this whatsoever. When you look at the ratio of gold-silver, it keeps falling. It's unable to cross back over the red line, the 18-day average, which ultimately favors silver because you need less ounces of silver to get 1 ounce of gold. And silver has come back down after a correction from the upper Bollinger Band again. It had lost its embedded reading, fell back to the 18-day average, looking for its support there. Now, the stronger market's the copper. Do you ever buy over a Bollinger Band? Well, you could. I teach not to, and that's because it generally isn't good for you. If you sell under it, you'll find you could probably do a better job within the bands and the same of buying. No, I don't think it's a buy right here. And number two, I don't think it's a real trend. I think it's a momentum play, but without a higher high, higher low, which you don't have, I'm not interested. The platinum has had these corrections. You fell hard. You rallied into the Bollinger Band 200-day average. You fell back to the 18-day average, and the chart's trying to make a determination of what to do. If I saw silver and gold come alive, I would think platinum would come alive. I think the bears are nibbling on the heels of the short side with stops over the 983 level, looking to see if they can push it to 921.60. Momentum is still pointing to the downside. And in the dollar index, the trend is up, but we start running into nitty-gritty hard levels now. The 100-day average, which has been curtailing the rallies along with the upper Bollinger Band, overbought condition. I'm not convinced it's that exciting. I'm Ira Epstein. I want to remind you that if you want to catch me in the morning subscriber video, not my flash videos I do for you for the financials, the morning subscriber, if you're following me on YouTube, just look on your bottom right here. You see the blue button. Give it a click. It explains how you do it. I'm Ira. You have a good day.